Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Sunday, April the 11th, the year's 2021. Let's talk trading. It's time for the weekly open-end gap. And this video is for educational purposes only. Your results may differ from mine. So, as we can see, most of the gaps have filled. We've got 2 gaps that are still open at the moment. Notice we are in the opening range for the year once again. Right here, we're working on the opening range for the week, and we're below the opening range for the month. The opening range being the first day high and low, that the area between them, that's the opening range for the periods of year, month, and week. 64 pips above the yearly open, 72 pips below the monthly open. Now, we're also just slightly below the inside bar that occurred 2 weeks ago. We are in the inside bar that occurred 1 month ago. And we're below the inside bar of the daily that occurred 25 days ago. But as you can see here, we've got a few pairs that we can trade inside bars on the daily, weekly, and monthly at this moment. Simple horizontal line trades. So far, no ranges over 100. Let's see, the closest one looks like we got 69 on the pound Aussie. We're right here at the daily, weekly open at the moment. You can see we already took out the pivot point. Not much of a bias, considering it's inside the between the buy and sell zone here. It was just a few pips off of the open. But still, that was a trade to grab a couple of pips if you wanted to take it. So now that the pivot's been filled, you can trade either the weekly open cross or wait till it gets to the buy or sell zone. Rats, 24 range, not time to take rat trades. So yeah, there are some traders out there wondering, yeah, on these reversal trades, you really want to see the range expand before you look for reversals. So that's one of the reasons we have the smart rat zone. When we look at the ATR or the average daily ranges on the smart range. Weekly pivots at 137.65, 8, call it 137.66. So we'll see if we can take out that this week. So we've already hit the monthly pivot. Weekly pivot, as I just mentioned, we're right there. And the daily pivot we've already taken out. So we still have that April 7th from last Wednesday. That pivot has not been taken out. So we'll see if price will return to that level or not. We are in the lower wick zone of Friday's daily candle here. Remember, price doesn't like staying in the wick zone. And as I mentioned about the ranges, you can see here we don't have much of a range right now. I believe I went over the ranges on the weekly wrap-up, so we don't have to look at those at the moment. I've got something else we're going to look at, though. In fact, it relates to the wall mall trades in a way. And you can see here, not much. This is early Asian session. It's just real on a early Monday. There's really not much price action. You almost have to wait for London to open to get some movement. There's still trades to be had, though. There are still trades to be had, but it's just slow going. And I've got the order block bar sitting up here, so you can see you're in a bullish order block. What I did do, I wanted to go over something with the traders. You know, we've been talking about the different brain management aspects of trading, and in fact, I came across a really good write-up on basically practice and what kind of practice and how long you should practice. And, you know, the goal of practice is to get better. And usually, if you want to get better, you're going to have to do something that you're not good at. So you become good at it, and that's how you get better. You don't want you don't want to practice things that you're already good at, except just to, you know, keep you know, stay in tune basically. So, for example, you know, if you're a basketball um, player and you can make things from, you know, 10 to 12 feet, you know, shoot your jumpers all day long, you might want to move out to 15 feet where maybe you only hit maybe 3 out of 10 shots. You got to practice that. And part of the practice is you do it until you lose focus and then you stop, because you don't want to practice if you're not focusing. But you know, the thing about trading, and I was talking to Walmart about this, is that we've said it before, you know, you can follow your plan to the letter and have a losing trade. That's just the nature of trading. Because in trading, there's an aspect of the gambling in it, and that part of that aspect is not knowing the outcome. You know, there's some things you can do everything right and it's going to work. Like if you follow the cake recipe or the cookie recipe or the barbecue chicken recipe, you follow that, you're going to produce results. I mean, it's going to be real hard if you keep doing it over and over again for all of a sudden one time it just doesn't work out. I mean, you'd have to have a bad piece of chicken or the stove, you know, the power goes out or something in the middle of cooking for it not to work. But trading isn't that way at all. And that's one of the hardest things about trading. And the thing about it is, once you put the trade on, you know, the reason you entered doesn't matter. So what we try to do as traders is we want to stack the odds, the statistics in our favor. We want to be on this side. We can't really stack it. It's we want to be on this side of statistics. And so, and when we trade, what can we get better at? I mean, some things are just a skill. Once you get it, you've got it. So, you know, calculating your stop loss, I mean, that's a skill. It's a simple math equation, or determining your risk. That's once you get it, you've got it. It's like riding a bike. I mean, that's it. So, what is it that we really want to prove on? Because at the end of the day, we just want to have more money in our account than we started with. That's trading. That's what we want to do. At least most of us. Some, maybe the swing traders, might think a little bit longer term. Maybe at the end of the week or end of the month, they want to have more money. They're not so much concerned or worried about day-to-day fluctuations or tick-by-tick fluctuations like us scalpers are. So, what is it we can really improve when it comes to trading? Um, Taking every trade that presents itself, so we make sure we have statistics on our side, and that's why I've got this screen up here. It's let's see, I got to remember what year indicator. We've got the 2020 frequency distribution indicator for instances. And what I'm looking at is high minus previous high, long breakouts on the 1 hour frequency. So, because that's what we look at on the Walmart trades. We usually look to break, you know, the Walmart lines, but if we have a high that is before a Walmart line, we want to take the break of that high. Maybe we get in a couple of pips, 2, 3, 4 pips early than if we wait for the Walmart line. So the first column is the previous bar. We're just going to do it. We're going to take all the trades. Okay, so you can see here, when it breaks difference greater than 0, 48% of the time, almost 49. Difference greater than 1, 43%. Difference greater than 2 drops down to 38%. Now, this is out of all the bars that are being used, okay? Not just the ones that break. So you have to keep that in mind. But you can see here how if you wanted to make 2 pips or more, you've got to be in the trade. It's just like if you want to get that 10 pip or more run that happens, 14% of the time. Well, you don't know which trade it's going to be, but you've got a pretty good chance of making some pips when you take this breakout. But you see, it's less than 50%. So you go, well, is there any way I can improve on that? Well, the next thing I look at is, what if the previous bar was an inside bar? Well, that doesn't make it any better either. But what if the previous bar was a bullish bar? In other words, you're going long, so the previous bar closed above the open, so it was green or bullish. What happens then? When you get the breakout, you can see you got a lot higher percentage here. So if that previous bar, H1 bar, is green, and it looks like it's going to take the breakout, you take the breakout, and you've got a little bit better chance. I mean, if getting 2 or more pips, you got a 54% chance. 3 or more, almost 50. So it doesn't sound like a lot, but you have to realize, these trades might run on, 5, 10 or more pips. And that's what we're looking for. And finally, we'll say, well, what if the previous bar was bearish or red? Well, of course, the odds drop down, but still, when it breaks out, you can see that there's still pips to be had. So this is how we use statistics to put things in our favor, because you've heard me say it before to Walmart. It's like sometimes we try and get too cute, because when you look at these charts, you can see how many times price moves across the line. And we know that between these 2 hours here, this is the movement. And you can see here that it's like 10 or more pips over and over and over again. But the only way to get it is to enter it. And not every trade's going to be profitable, and you're just going to have to accept the loss. You can almost think of trading as gambling, but then you can think of it as a sport. And in sports, you don't expect to get a strike every time you bowl, or a hole in one when you golf, or a hit when you swing the bat in baseball, So you can't expect to win every time, but you can win the game. And in trading, the game lasts as long as you want it to. That's the one other thing about trading. Every trade can last as long as you want it to, unless it goes against you and wipes you out. But if that doesn't happen, you can stay in that trade for as long as you like. So, when we talk about getting better at trading, you really have to define what it is you want to get better at. And a lot of times people are looking, or traders are looking for better methods. I mean, just all over the internet, these guys are talking about order blocks. And it's funny because when I look at order blocks, I think, well, really, what's the big thing about order blocks? When I look at it, I see here, I think, well, I think holo trades. I mean, here's the lowest open from Friday, here's the lowest open here, and you see what happened. Price came down, made a new lowest open, reversed up through it. It's just the lowest open. It's not a fancy name. Hard to market holo, right? Highest open, lowest open. But anyway, I hope that gives you a little insight and helps you out. If you have any questions, feel free to post it in the comments. So, fellow traders, I hope you have a profitable week this week. And when you sit down at your trading platform, always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.